Welcome to the Building Interest Podcast presented by Leader Bank, a series of free-flowing conversations on a wide range of banking and money-related subjects. We are here to discuss all the issues that impact your financial future. Do you want to buy a home, start a small business, or secure your financial future? Or maybe you want to maximize your savings ability, get your budget in order. We can help. Our talks with experts and influencers across the world of banking will set you in the right direction. I'm your host, Greg Farber. Let's jump right in. We are back with the Building Interest Podcast. Today we'll be discussing the most common myths surrounding the home buying process. I'm your host, Greg Farber, and I'm lucky to be joined with a few special guests today. Kerri Mclaughlin, loan originator for Leader Bank, and Beverlee Vidoli, broker and owner of RE/MAX Realty Experts in Burlington, Massachusetts. Kerri and Beverlee, thank you both for being here.
Thank you for having us.
I'm excited to hear your thoughts today. So let's lay some groundwork. How long have you both been in the home buying industry?
Beverlee.
Oh, age before beauty. Is that the story?
Maybe.
Well, I shudder to tell you that I actually have been licensed since 1979, 80 year, and started shortly thereafter part-time. I was a full-time teacher at the time, way before the technology of today's world came into place. So it made it easier to kind of transition from one to the other. But starting in the mid-'80s, when I started becoming a mother and wanting to be more home, I transitioned into the real estate full time, and I have never regretted it. I love that I can use my education background in my ownership of a company and training agents, but I really love the process of getting people into homes. And I came from a real estate family growing up, so I guess it was a natural transition.
Kind of knew the ropes already going in.
Well, it was a different world, but yes, I knew the ropes.
Kerri, you've been here, we were just talking, 13, 14 years now as a loan originator. Can you share for our listeners that may not know what a loan originator is, what that actually means and what you do for the bank?
I meet the clients from the realtors 90% of the time. And then I have to educate them on, what they make per month in order to afford a home.
Do they come to you already with an idea of what they want, or are you part of that decision process?
50% of the people do, and 50% of the people don't. And a lot of them don't realize what's on their credit report. A lot of the time they come in with a preconceived notion of what they can afford. And then they,
you kind of have to walk them through what their credit score is like,
right,
what their income is like, where they actually can be.
What the taxes for the home is. I break everything down and...
Because when you're renting, you don't think about taxes and things like that.
She carries them through that process. And I have to just interject here because a lot of the time there are buyers who come to us first and they don't realize the process they should be going through in the order in which it needs to be done.
That's what I was going to ask. If they're coming from you to Kerri, and they already know they want to buy a house, they know they want to work with you, but they may not know what they're getting into.
They know what they want, but they don't know how much it costs.
Yeah.
And then when they start finding out how much it costs, the first thing a realtor should be telling them is to get pre-approved. We just went through this yesterday.
We did.
And the buyer gave me some information, but in today's world, we don't, as realtors, get into the financial complexities of somebody's
due to privacy.
Due to privacy rules and so forth. So we get general information, but then I quickly turn them over to Kerri, and Kerri has been great at setting people's expectations on what they can and cannot do as far as their mortgage part is. Now, what they might have in addition to that is something that she can explore as well.
I think breaking down the payment for the customer between taxes, insurance, and the mortgage payment is definitely something that they don't realize when they put it on paper.
Something they don't do on their own, perhaps, when they're sitting at home dreaming about buying a house.
No, they look at it and say, "Oh, the rates are so low. I can afford this $600,000 home." And then when I break it up monthly and the down payment and what they have to pay for, it sometimes will slowly turn into more or less, depending on what they make per year.
So really what I'm hearing is that you have very different roles, obviously, and to sort of paraphrase, you find the house and you find the money.
Correct.
But it doesn't work one without the other.
No.
You have to work it together so that the right house can be found with the right amount of financing and down payment and things to make that
Exactly.
client happy.
So sometimes it works that we find the house, and then that's when I've met the buyer. So now we go to Kerri's role. But oftentimes, before I even do that, it goes to Kerri, and then it comes back to me. So to make my role more efficient and hopefully quicker.
So in a slightly different direction to me, and I see so many friends and colleagues that change jobs every few years, sometimes every few months. I think maybe that's just an indication of today's job market or shifts in culture and things. But to me, one of the most impressive things that I've heard so far in our conversation here today is both of your backgrounds is how long you've remained committed to your respective roles, your companies and everything else. And Kerri, maybe I want to start with you. Obviously, there's a lot of banks and mortgage companies around, and you've had different managers, different team members around you, all of this. What is it that keeps you at Leader?
I love Leader. I think Leader checks all the boxes for me and my clients and my realtors. It's family oriented. They have amazing staff, underwriters, closing departments. I think the main thing about Leader is I have to work with a team, realtors and attorneys. So when you talk to a realtor or an attorney that you've been doing business with for years.
So let's slow down for just a second for any of our listeners that don't know, why are we talking to attorneys during this process?
So the attorney in Massachusetts needs to close the loan for you.
Okay. So just like you need a realtor to find the house, you need a lender to come up with the money, you need a person or an agent that's going to close that transaction for you.
We need an attorney to close the transaction. We need the attorney to run the title for the home.
Okay.
Make sure it's clean.
So you have all these different teams, all these moving parts. And so how is Leader keeping you relevant and keeping you successful in that?
Oh my gosh. Leader has such a wonderful name for themselves. My underwriting staff and my definite processing staff and my manager literally could not be the best. It's amazing. And they've always been so wonderful to me.
I'm going to jump in right now. I'm going to jump in right now because I have worked with a lot of banks, and there are some really good banks out there, and there are other banks that really don't have the backup staff, the professionalism, the proficiency that they work under. And I've had some difficult transactions that I know were made possible for these buyers because of the knowledge base that Leader has. Right. And not just the loan originator, because things transition off of her to other departments, and it's them working together to make that dream come true. It's not about the money. It's about how it's put together as a team and to make that dream come true.
I definitely think everybody that's in their role is, a master in their role.
I think from my standpoint as the person who puts the deal together, you have to have a lender who communicates with the borrower, because one of the things that can happen, and it happens everywhere, less frequently at from your bank, but it does happen that everybody thinks when they get that application complete, it's been processed and it's going through, gets to underwriting. They don't always expect that something else is going to be needed. And so you get that email that says that we need, it's been reviewed, but we need 2 or 3 more documents. It's the communication explaining to them that this is going to help benefit your loan approval. And they do that. They've made, Kerri's always been the one that oftentimes they'll come to and ask for, why do we need this? We thought we were complete. So she actually gives them an explanation so they understand.
You have to give them an explanation, especially, when they're already stressed out buying a home.
Right. If they understand what they need or why they need it, they're much more likely to give it to you.
100%. And without, reservation to do it.
So then let's talk about, I guess, for lack of a better word, some myths around home buying, right? So lift the curtain a little bit, and let's talk about maybe if things are easier or perhaps even harder than they might be perceived. So I'll start with, historically, there's this perception that you need 20% down or you can't buy a house. And we in the industry, we know that isn't true. But can you tell me if that belief is still as strong with your client base as it was, say, 10, 15 years ago? Is that changing? And what tools do you have to kind of work through that to get customers over that hurdle of, I'm worried that I don't have enough money to start this process?
I think that's where Beverlee will send me the client and I have to pre-approve them and I have to dive in and say, what were you expecting to put down? What were you not? 20% is a huge myth that they have to put down. We have so many programs right now, first-time home buyer programs, Home Ready, Home Possible, FHA, mass housing. I mean, I could go on.
Realistically, how much could you put down as a starting point?
You could put down.
That's a lot less than 20%.
It is a lot less than 20%.
That opens the door for a lot of people that might not have considered that they're ready for that. 100%.
I mean, you can put down 5%. 10%, 15%. There's a program for every percentage down.
Beverlee, do you find when people come to you that they have that preconception that they still need 20% and then you have to send them to Kerri and say, that's not true?
Well, they worry that they're not going to have enough money down, and so they can't get the house of their dreams, or at least some of the features of it. And so I let them know that that's a good possibility. The beauty, if we have to find something good out of the change in the market over the last couple of weeks, is that people can still come in with lower down payments and be competitive in the market. There was a period of time where, yes, the programs were there with low down payments, but they were up against competitive offers that were stronger. So you try to work out ways in which we can make them more competitive. And Leader has been offering new programs and creative kind of programs that have, I think, been in the forefront of what a lot of other lenders can do.
I think the number one thing is when we do run a client's credit, you have to sit and look at their credit.
Have a conversation with them about what's on it and what it means and how it's impactful.
And our credit reports are done so well. As a consumer, they might not be able to read it and say, I get what you're saying.
But with you to walk them through it.
Walk them through it. And then we know how many points are available. If a card is maxed out and they pay it down a little.
Right, which again could increase their ability to get a particular program they're looking for or something like that.
The first-time home buyer programs are definitely limited to income limitations and credit scores. So you do have to meet in the middle. But I feel like it's a big range. A lot of people can get into these programs.
Now, I know before I was a homeowner, I firmly believed that it was cheaper to rent than to buy. My boss at the mortgage company that I worked at 20 some years ago, he kept sending me information on homes that he saw coming across the market and how I was missing out and I was the one that didn't buy a house, and I resisted. And I thought I knew everything because, 20 something. And of course I knew everything.
You knew everything.
Right. And I too, I thought that it wasn't affordable. But then once I did, and once I became a homeowner, it started to dawn on me how this whole time as a renter, I was paying someone else's mortgage instead of my own and building my own equity. Do you hear that resistance from customers that there's this myth that it's cheaper to rent than to own? And how do you get over that hurdle with potential clients?
Right now, what I'm hearing is it's the best time to sell just because of this particular market.
Right. The current economy that we're in.
The current economy that we're in, like right this minute, they say, oh, I'm going to sell because I'm never going to make this much money. However, on the intern, if you look at what rent costs, you need a 6-month to a 1-year lease, and it is probably double your mortgage.
And you can't get out of it either.
And you cannot get out of it.
Without big penalties.
And then you're stuck. You can't buy something because you're in a lease.
Right. You're tied up to a certain date.
So that money that you made because you sold right now is going to rent within 4 months. So I do feel that most people don't feel like renting is number one right now. Just what I've dealt with.
That's good to hear.
Because rent is so expensive. Was it like this 10 years ago? No. You had to convince them that you are buying a house. It's going to be yours. It's a phenomenal savings account. It's a phenomenal investment. It's going to be yours. You're building your credit, your equity. And when you sell it, there's money there.
When I get the opportunity to talk with somebody about rent versus buy, it really comes down to what their lifestyle is, what they want. The sellers that want to take advantage of the marketplace do have the challenge of where they're going to go. So again, Leader has programs now that have addressed that and been able to helpfully make it possible for them to be able to purchase and then sell afterwards. When people are looking at their first time home and they're coming out of an apartment and they are realizing that they're paying someone else's mortgage because their parents and everybody else have told them that, have to be realistic about where they're going to start and how they can afford it. So that's where the analysis and the process begins. But I often tell people that there's no reason why you can't purchase the property. And if in 3 years, or even, you have to stay 2 years, otherwise there might be some tax implications. Mm-hmm. But after 2 years, if it's not the right lifestyle for you, you can move on. I try to explain to people that look at the different types of loans out there right now. Right now, with the interest rates climbing, you don't have to be at a fixed loan. You could be at a 10-year ARM, which gives you a long period of time to watch the track and you build your equity, but you're also building your income. And hopefully in 10 years, you'll be able to lock in if that's what you want.
So I want to jump back quickly to something that you said earlier. We talked about cycles, and I'm thinking about shorter term cycles now, just annual seasons. And we always talk about there's a hot spring market or a summer market when everybody is excited to go out and find a new home. They're, depressed from winter and they want a new start or something.
Right.
But when that tapers off, how do you both manage expectations and how do you kind of make sure that your clients can get what they need and find what they need in the fall, in the winter, when maybe the market isn't so hot? How do you balance that?
Starting with the inventory.
It
depends on what timing people have. There was a period where people were looking so long to find their next step that it might not happen until the fall. And so they had to deal with that timing. And rather than holding on to 2 homes until spring market, it made sense to put it on. But you can utilize, with all the technology and the way we advertise and photograph properties, I often ask people if it's a wintertime listing or a fall listing, do you have pictures of the house in the summer and the spring when everything was in bloom? And we'll incorporate that into our marketing pieces so people can see how lovely it is at that time. And I actually on one of my current listings, I used a picture from the winter, a snowfall picture that was just beautiful with a sunset in the back. And it was beautiful enough to put it in my springtime marketing piece that we were doing. And it was appreciated. The real issue for people is curb appeal. So if you're taking care of your property in the fall and you're doing a fall cleanup, and the house looks good, then by the time you get to the winter, the house is still going to look clean and groomed. But if you've not been taking care of it, then I have people that I'll call in that will help do as much of a cleanup as we can possibly do, because curb appeal is important.
So the myth to buy a house in the spring or the summer really isn't necessarily true. It's all about the presentation and how it becomes available. And
in the years that I've been doing loans, we always used to get ready for the spring market. Like you just said.
It's still the highest volume. It's still the highest volume, but it's year round.
But I feel like it definitely has tapered off because it is year round and it is inventory based. Definitely. And right now, if the, towns that used to have 250 homes on the market at any given time had 8. We can have
adjustments of inventory and adjustments of the buyer pool in the middle of the summer in July, as much as we can have it in the beginning of the winter in December.
Correct.
And through the winter. It's really when people need to go and what their expectations are. The majority of buyers are looking for a place that they feel comfortable, that they can live in.
But this idea that there's myths around home buying, that maybe I don't have enough of a down payment, or I shouldn't be buying at this time of year, or I don't know if it's the right opportunity or whatever. Throw that all out. Talk to someone, talk to a professional, find out what the inventory is, find out what your credit and your loan situation would look like.
Get prepared. So who you choose to work with has to be an important factor, both in the lending and in the purchasing side.
It certainly sounds like it.
I feel like you have to be available. Mm-hmm. I think my phone goes off every day, all day, 7 a.m. to 10 p.m.
And yet, like you said, you love it.
I do. I'll take a call whenever. You know that.
Mm-hmm.
And I
Or
think
at least
being
respond.
flexible.
It's having people that will respond and be involved in what you're doing, because the reality is that, especially this past year and a half, real estate is 24/7. You don't get weekends like we used to because
Definitely
of the competitiveness of things. So you have to be able to work with a person in a schedule that meets the demand of the marketplace.
Agreed. You have to be available.
Well, listen, I really want to say thank you for both being here today. I had a blast. I thought it was great hearing about your experiences and all the different sort of options that are available. And maybe this whole process isn't as overbearing or hard as some people might perceive it to be. And I hope the listeners got that same message from us. Any closing thoughts you want to leave our listeners with? And again, thank you for coming on today.
No, I think the myth that our whole subject today is putting 20% down. That's not the truth. You can put down very little. But I think you have to be educated in all the different points of a mortgage.
And I think the team effort of having the right realtor, having the right mortgage company, and having the right attorney who are going to walk you through the process. So take the time to really know the background and the knowledge level of the person that you're working with at any one of those levels, but particularly in mine, I think, because we're the core of finding the property, and the support system of the lender and the attorney.
And communication is huge.
Are important. Exactly.
Well, thank you both so much. RE/MAX Realty Experts is not affiliated with or owned by Leader Bank N.A., and all opinions expressed by Beverlee Vidoli are her own and not the opinions of Leader Bank. For more information on today's subject, visit leaderbank.com. In addition to past episodes, you can also find our corresponding blog entries for more insights. This podcast is a production of Leader Bank N.A., Equal Housing Lender, member FDIC, NMLS number 449250.